All right, hi everyone. Welcome to another episode of Trading Bitcoin with your host, Vays. Today, I am once again joined by a co-host, none other than Sawcruhteez, who recently started going by his real name thanks to the Hyperwave book. How you doing, Saw?
Great. Hi, everyone. Welcome to another episode of Trading Bitcoin with your host, Vays. Today, I am once again joined by a co-host, none other than Sawcruhteez, who recently...
It was open on Twitter. My apologies for that. Yeah, things are going. As mentioned, I have recently doxed and am going by my real name as part of publishing the Hyperwave book. Actually, just got my copy in the mail the other day, so really excited.
You know, I don't have one yet. I gotta just been a little preoccupied with the virus shit, and I was out of the country. But I do plan on getting it. I'll have you and Leah both sign it. But good job, man. Congrats.
Excellent. Thank you very much. Yeah, I'll be really excited for you to read it and give us some feedback. We've been getting some good feedback already. And yeah, it's been really exciting. I've been working hard on that for the past year. And so, yeah, that's really exciting to have that.
Hold it up again. I got you on the big screen.
There we go.
Right there, guys.
So yeah, the rogue wave of financial markets with none other than the late Tyler Jenks, and myself and Leah put that together. So yeah, that's been a really exciting couple weeks to get that out to the public after all the hard work that has been put into it. So yeah, we'll definitely be excited for you to get a copy, and we'll of course be more than happy to sign that for you. And yeah, thank you for everything that you've done. Without you, that book would not have been put together. There's pretty much no doubt about that. So thank you very much. And there is, you are in there in the acknowledgments.
Oh yeah, no, thanks for the kind words. Thank you for throwing me in the book. I don't think you and I have done anything since the conference, basically, right? We got your Consensio workshop there. We played in the poker tournament. I don't think we've done a video since, right?
Nope. Last video was right before Unconfiscatable, and yeah, that was definitely a good video that we did. It went for a while, but since then we haven't had the chance to go on air. But that sure was a heck of a time. Had a blast out in Vegas. The workshop went incredible. I was really excited about how that turned out, and would have been a little more excited about how the poker turned out if I would have lasted a little longer. But that was really cool to see you win it. If it wasn't going to be me, I was pulling for you, that's for sure.
Yeah, that's right. We'll get to play again soon at the Financial Summit in Bali, like we did last year.
I'll be looking forward to that for sure. Can't wait.
Hey, how are you doing with this quarantine, man? Are you on lockdown? What's going on? What's going on over in Colorado or
yeah? Colorado's been hit pretty hard. It was one of the first few to really start shutting things down. They shut down the ski areas like probably 3 weeks ago or so, and gyms and that sort of thing. Then they closed down the bars. And they're not going to, it sounds like they're not going to force us to quarantine. The governor is just strongly encouraging us to do so, which I actually really like, not being forced to do something that may be against my will, but being more kind of encouraged from more of like a libertarian perspective is something that I definitely really appreciated. So I have been pretty much in lockdown myself. There's been got stocked up on food and supplies about a week ago, and have only left the house about once in the last week or so, maybe twice for some essentials. But yeah, I've just been locked down and taking advantage this time to get a bunch of work done.
Yeah, I'm on day 5. I'm keeping track with my live streams. I'm on day 5 right now. I'm debating if I'm going to go out this weekend to the farmer's market, if it's open, to just stack up on more meat. It's debatable. I have enough for 2 to 3 weeks, but I don't know. I don't want to run out at the worst time. So I'll see. But I feel good. I haven't felt any symptoms or anything. So I kind of hope I got it along the way and it just didn't affect me, because then I'll be immune, so it doesn't matter. All right.
That's
Anyway, I think it's time to jump onto the charts. We've chatted long enough. So let's go ahead and jump on that. Hey guys, this is, oh no, this is not Sawcruhteez's. This is Sawcruhteez's website, recently launched. And of course, this is Sawcruhteez's YouTube channel. There it is. You're not doing daily videos anymore, more like 2-3 times a month now?
Yeah, shooting for once a week. When I'm traveling, I'm not really doing videos. I tried to do a video a couple times when I was in Europe, but I don't have it set up properly on my laptop. So I'm shooting for once a week while I'm here at home, and that's been a pretty good pace for me. And Daisy's actually been joining on the last couple, so that's been cool.
Yeah, I know. Daisy's awesome. Daisy, I'm sure you're watching. Thanks, guys. So I'll keep an eye on the live chat. I'll keep an eye on questions. And how you want to do this, man? You want to give an update? And like everyone listens to me all day long. So we're just going to start off with you. Give me your update. I'll probably interrupt like I usually do. And let's also talk about traditional markets while they're open. So maybe kick off with Bitcoin at a higher level. What you think. Let's go through the markets, and then afterwards we'll talk about Hyperwave.
Sounds great to me.
I'll just give you the screen share. So let me get out of my screen share. Meanwhile, I'm actually trading. I'm trading again, and I've been posting screenshots just to piss off all those people that said I couldn't trade, and all I do is teach. But I am trading traditional markets. I'm still keeping an eye on my portfolio, which is pretty damn elaborate. I want to take a screenshot near the end, you know, near the end of the day, like I did yesterday as well. So we'll see how that goes. All right.
Yeah, saw a tweet that looks like it's been going well for you. Saw a tweet recently with some results. I think maybe that was from yesterday or something. But that's great to see you getting back into the trenches and doing some trading. That's got to be a lot of fun for you, I'd assume. Okay, so yeah, it's been a little while since
Tyler. Actually, I'm gonna keep calling you Sawcruhteez. Trading is always fun when you're making money.
Yeah, that's for darn sure. No doubt about that. And there's something about it. I mean, it's definitely no fun when you're losing, but there's something about it that really makes me feel alive, or like really, when I lose money to the markets, there's something inside of me that just, you know, really wants to bear down and, you know, put in the work to get that back. So I think that trading is definitely most fun when you're winning, but when you're losing, it can still really be a great opportunity to kind of improve, not only in trading, but as a person. So I try to enjoy every part of it, but that's definitely easier said than done. Okay, so real quickly, I just want to walk through what I've been doing in this recent action, and that is going to be just based upon the EMASAR signals that are loading up right now. We did have this major move down that was a situation where I was very bullish, buying this dip right in here, adding on to my position that was established back in here. Was really interested in adding here, was tweeting out and everything, was feeling very bullish. We were coming back to retest prior horizontal. We had a trend line. We had the moving average. It was a great setup. So I did go ahead and add on to my position there. Pretty much immediately moved against me. And I did get this close long signal at 88.40. I did execute that and fully exited my positions. I do hold Bitcoin long term, that I do not exit on these signals. So I definitely felt the pain of this move down with the HODL stash that I have. But for the trading stack that I am using to trade EMASAR, I was able to go ahead and execute that exit at 40. Cost me a little bit on this entry, but overall made some money on the average cost basis. And unfortunately, I did completely miss out on going short at 82.37. I was on a plane flying back from the Netherlands when that signal occurred. And by the time I got the chance to take it, I felt the price had moved too far. And this wasn't a spot where I was interested in taking that signal. I felt I missed out, and that if it bounced back up into here, I was definitely going to build that position, but it just took off and moved too fast, left me completely behind. So I was just sitting on the sidelines for all of this action in here. And now I have been waiting for a bounce to sell. This is a bear trend, and therefore, and I did miss out on my short signal. So therefore, I just have to kind of wait patiently, sit on my hands, and the signal for me will come when price test the 200 moving average on a bear trend. So right now I do have orders set to short from 72 up to 75. And that's what I will be looking at. If we can get up into that area, then I will be building a short position. If we turn around from here, I would miss out on that again. And if we get up there and blast right through 75, that's where I become really, really interested in this thing turning back bullish. If we can get back above 7,500, that would be a huge, huge deal to me, and would tell me that it is most likely that the market bottomed, and that this isn't just a dead cat bounce anymore. 7,500 is the line in the sand for a couple of reasons. The 4-hour 200 EMA is one of the primary reasons, as well as prior horizontals. As long as we're under 75, I am viewing this as a full-on bear market, and therefore I want to sell bounces. And that's why I'm really interested in shorting right here, is due to the risk reward. If we do get back above 75, I will be not even hesitating to get out. I would be very quickly executing an exit signal if we did get back above 75, and that shouldn't cost me too much, depending on what happens. Crazy things can happen, and maybe it just blows right through and ends up costing me more than I'm expecting. But as it stands, I really like the risk reward on selling this area. And if it does break through that 75, I'm going to be in a position where I'm going to be looking to basically fully execute a stop and reverse and go long. I'm not expecting that. I'm giving that only maybe a 30% chance at this time. But with everything that's been happening with the feds and the money printing and this nice capitulation that we got, I'm really starting to become very interested in the idea that this was actually a bottom, opposed to just a place that needed to revert to the mean.
Gotcha. Hey, the EMASAR looks a little different than the last time I had you on the stream. It's a lot cleaner now.
Yes, I just actually published a big update the other day, and a new programmer has come on board. His name is
Johan. I know. I think I was hanging out and having dinner with him on my recent travels.
Yeah, you sure were. So yeah, you shout out to Johan. Thank you very much for all the hard work that you have been doing. This is really a very, very important update that I'm really excited about, because the biggest problem with this indicator was that people using it didn't have a good understanding of where the stop loss was going to be. You just have to wait for signals, basically. If you get an open long, you open it there, and you have to wait for a close long before exiting. And the benefit of that is it really helps to keep us away from getting chopped out, getting trapped out on these wicks that come down and wipe people's stops out before continuing. So that's a big benefit to it, but it's really, really bad to have somebody get a signal here, but not really understand, is this a 5% risk? Is this a 20% risk? And that was almost enough of a reason for me to just keep this to myself, because I personally have a really good understanding of what the risk is going to be, and I can estimate it really good myself. But to share what the stops would be at with other people, I would basically have to give away the code. So that was something that was a big problem that I wasn't sure if I'd ever be able to fix. And that's what this blue, what I am referring to as the ocean, comes in. It is estimating our stop loss, and that allows us to understand risk and more properly determine position size. So the median of the ocean, referred to as the buoys, that is the marker where you really expect a stop to occur. If you break down the median of this, then you are strongly expecting a stop to occur, and you should be really ready to execute a close long signal. As long as you stay above that territory, there's still a really good chance that it's just kind of a trap or a shakeout before a breakout. So that can help you be prepared for upcoming signals, and it can also help you to determine risk and position size. So if we go to this signal here, 8158 is where we signaled long. We can look at the difference between the signal and the buoy, and that tells us the estimated risk at about 16% there, and then it trails. And again, it's not a hard stop loss, it's on the books, but it is a very, very good estimation of essentially saying at what price would we need to get to for moving average crossovers to occur. And that was a really hard formula to figure out. And again, I don't think I would have been able to figure it out without Johan. So thanks again for everything there. And yeah, this is something I'm really excited about. And that allowed us to get this together, which basically tells you right away your position size, and you can adjust it. It's really a handy tool. You can come in here and tell it what's your bankroll and what do you want to risk on a signal. 2% is a good rule of thumb, so that's what is set at by default. So say we've got a $10,000 bankroll. It is telling us that right now, if we wanted to go short, the risk would be about 25%, and therefore the max position would be 8.2% of our bankroll, which is $822. If we went short and got stopped out up here, we would lose about 2% of our bankroll. So that's a really handy addition to help people understand really quickly what position size to take so that they're not risking more than a reasonable amount of their bankroll.
All right, very cool. And so can you just explain that blue band in general? That's not the SAR itself.
No, it is not the SAR itself. It is basically the biggest part of it is estimating at what price would we need to get to for moving averages to cross over. So when we're right here, we're kind of wondering, we're saying, all right, I'm longing here and I'm staying long as the moving averages are bullish. At what, so we would need to estimate right here, what price would these moving averages cross over at? What price would we need to get to? And that's a really hard thing to kind of figure out. Through experience, I've got a really good understanding. I can estimate it pretty good myself, but to come up with a formula that works on all time frames that says, you know, if price gets here, then that's where the moving averages would be likely to cross over. And what's really neat is this huge move we had, record move on Bitcoin back in October for a 24-hour move. And this was telling us right where that price would need to get to for moving averages to cross over. Like it was way far away from the price here. So it did a really, really good job of estimating in real time what the stop loss would be at. This will basically tell you if price gets here, expect that stop to occur. So it helps you to be prepared for that ahead of time. And that would also help you to determine the risk on that signal when you enter.
All right, very cool. So based on everything you said before this, it looks like at the moment you do you want to pull up the daily chart so we can talk about Bitcoin outlook?
Yep, absolutely.
So it sounds like you are staying with momentum. You are bearish and you are looking to time assured around 7,200.
Yep, 72 to 75 is where my orders are set. So yeah, if we get up to 72, then I will start getting filled, and I will have orders all the way up to 75, and then I will be using this as my estimated risk. So that would be about a 10% risk is what I'm estimating. So therefore, I feel like I can enter about 20% of my bankroll, and if it goes against me, I'll lose about 2%. So that's what I've got is orders stacked for 20% of my bankroll to short Bitcoin from 72 to 75, entirely based on the 4-hour chart and EMASAR. So yeah, let's go ahead and take a look at the daily.
Hey guys, so just keep in mind that this is a proprietary indicator. It's not available for free. This is something Sawcruhteez sells for a 1-year membership.
Yep, appreciate
but you
that.
do get it for free for at least a year if you come to the Financial Summit, along with all the webinars that Tyler Jenks ever did, all the webinars that I have done other than the option stuff, and anything Ugly Old Goat's done. So we try to give you like the value of the entry fee in our products and services for the fall if you could join us at the Financial Summit.
Absolutely, tons of value there. Absolutely, and very glad to be able to offer something myself. So before going out to the daily, I just would want to walk through a couple more things. I have been targeting the 7,600 area here after this ascending triangle confirmed with this close here on March 19th. That was a spot where I didn't long because that would be betting against the trend, and I bet with the trend. So that was a spot where I was identifying this as a bullish setup and was giving a target of 7,600, but was only using that as a way to help me identify an area where I may want to short a bounce. So seeing a target that is provided from a pattern that comes right in line with where I'm looking to sell based on the moving averages and based on the horizontal. Let's see here.
Yeah, oh, actually, so I did point out that triangle as a buying opportunity, and I would have, if I was in front of the market and trading Bitcoin, like I am trading right now, but I'm trading traditional markets, I would have taken that trade. But my triangle was drawn a little bit differently with a much lower target. And I'll tell you why. Because I wasn't using the 4-hour charts, Sawcruhteez. I was using the, or I might have been using the 4 hours. I might have been using a different exchange. And my triangle was, my target was only 72. So my target was pretty much hit. And that's because I didn't use the wick of the low as the bottom of my triangle. I used more like there, exactly. And you lower that other part, lower that side. Yeah, so basically, but I didn't have the close of the candle that low. So that's the thing, right? So on a different exchange, the close was, because you're using BitMax, so it's a little bit different. And if you raise that, or if you make that line a little bit steeper, let's say put the left end, yep, something like that, exactly. And that's still a triangle breakout. That's how I had it. That's how it fit on my end. And that made the target significantly lower, right around the highs that we already had.
Very interesting. Yeah, that's something I didn't consider because BitMEX did get really screwed up in here with cascading liquidations and whatnot. It was trading at a big discount to spot exchanges and got a lot lower than spot exchanges. So yeah, being that this is kind of the anomaly, it does make sense to use the spot.
Right, because yeah, because you can see it right there on BitMEX, you went all the way to 35, but on other exchanges, we only went to 38.50.
Yep, that definitely makes sense. I always do my charting where I trade. So that's why I'm always pretty much charting on BitMEX. But in this situation, I do agree with your interpretation because if you're to look at all the exchanges, 9 out of 10 would have yours, and then only this one would have mine. So yeah, I do like that. But I'm still very intrigued by this level up here around 76. due to this being a horizontal that we could throw back to retest for resistance. And then also due to this trend line coming in right here above that is in confluence again with the moving average. So that is something that I will be continuing to kind of target that area as a good spot to enter into a short position, and kind of keeping my eye on a trend line here in the meantime that we have been finding some support from, and kind of seeing a bit of what may be considered a cup and handle, and maybe it would look a little bit better on different time frames. But it looks like if you do consider this a cup and handle, which has not confirmed yet, if it does, it would also be pointing up into that area. So I've been waiting patiently for a while now to see if price can get up there. And that is still what I think looks most likely. We remain in backwardation. We remain with shorts paying longs. That's a recipe for the price going up as far as I'm concerned. And that's where I'll be very interested. If we get up into the 7,400 area and all of a sudden the market re-enters contango and all of a sudden longs start paying shorts again, that would be very, very good confirmation that it's the end of a bounce. And something else I'll be paying attention to, would love to see, is a daily 9 up in that area. If we could...
Oh, you will. Well, in that area, you'll definitely see the daily 9, 100% guarantee of that, and perfected, no less. But we'll see if it gets all the way up into that area. That'd be interesting.
Yeah, that's what I would really like to see. A 9 down in here isn't going to really do much for me. I guess if it's at 72, that'd be great. That would be where I'm starting to build. So yeah, this 9 is very intriguing to me. And big shout out to Tone System, has been working very, very, very well and really helped me to identify what I thought was just a local top, was right here. We were on a daily 9, a 2-day 9, and I think like a 5-day 9. Bunch of 9s popped up right here at the top, and that was a big help to me. And it was kind of the inverse where we were in extreme contango. The futures were like at a 6% premium or even more, and the longs were paying big premiums. So we had that situation up here, and then the kind of inverse down here where I consider this a 9 with how crazy all this was. That's definitely effectively a 9 to me, just because of how crazy all this was. And you got that when the market is in backwardation with shorts paying long. So kind of the equal and opposite reaction is kind of how I view it. So yeah, definitely paying very, very close attention to the TD sequential, and would love to get this 9 up in my sell zone. That would be a good confirmation that it's the trend that this bounce is ending.
All right, very cool. Hey, we have 30 minutes left in traditional markets. Let's change gears over to traditional markets, and then we'll probably come back to Bitcoin in terms of Hyperwave. But let's cover, the usual suspects: stocks, S&P or Dow, whatever you choose, gold, oil.
All right, let's do it. Just start with the S&P 500 here. And this is a situation where I have been really wondering if we're going to get some sort of bounce. And really, I think a lot of people have been wondering that for sure. Because for me, this could have easily been that kind of dead cat bounce.
Well, I went long there.
Yep. I actually captured this a little bit myself too. And that's, I just mentioned not trading against the trend, but I have been actually working really hard lately on developing a bot that's going to be doing some day trading. And it's actually been going really well. So I was able to use that to actually capture very near the bottom there, and did that publicly as well. So that was cool. But that is a spot where I'm really wondering, when, like, just think of the Hyperwave archetype, when you have a big sell-off after a big move, whether it's a hyperwave or not, it is so common to get this sort of ABC correction where you get this bounce that gives you a lower high and makes everybody think that kind of the bottom is in, and that is the best shorting opportunity. Generally, I look for the big moves down and then the following bounce, and that is just going to be an ideal shorting opportunity. And I did not short that because I was still looking for more of a bounce for it to be a shorting opportunity. Did get out of my long profitably, but yeah, this has been the question in my mind: was this action here, or are we still going to, that would be this very, very, very weak bounce. And it really doesn't look like it's big enough. I really have been expecting this thing to bounce. I haven't necessarily pinpointed where, but due to how far away the price was extended below these moving average crossovers, tells me that it is highly likely that we're going to bounce back to retest at least the 50 and hopefully the 200. So that is a spot where I am actually still in some long exposure in the stock market that did get a exit signal on this death cross here. Let's go ahead and pull up the EMASAR. So let's see here, the exit long signal actually occurred here with the open short here. So right here is where the exit long occurred, and that's where I started targeting a bounce to the 50 to fully exit the rest of my positions. And that's where this came up not even close, and here a short signal came in that I was not, when the signals occur with price too far from the moving averages, it negates the signal, and I have to wait for a return to the moving average, similar with how I missed that Bitcoin short. I wait for a return to the moving average, and it means sometimes I miss out, but it's fine because it's just way too risky for me to be shorting this far away from my estimated stop, which is all the way up here at 37.50. So here I have been really, really wanting to see price get some sort of bounce, and if it wasn't for this crazy environment with the whole country shutting down due to the coronavirus, I would think in my mind it would be extremely likely that that bounce would come, and I would not even be really sweating about holding on, but as the things have just gotten worse and worse and the country's shut down more and more, it's really made me start to wonder, was this the bounce? And now it's just going to be the continued sell-off, and do I have to look at taking a significantly bigger loss than originally than I would need to at any other time. So I'm really, really happy with what we're seeing over these last couple of days, and I've got orders set to basically fully exit my positions. And if I can get those filled, I'll be one happy camper. And if not, then I'm gonna have to be watching these things like a hawk and potentially looking to implement some sort of hard trailing stop loss at this point.
All right, so let me throw my view. So can you just turn on sequential?
Yep.
And you could have left the moving averages, they weren't in the way. If you throw on sequential, and one more thing you should throw on there, throw on the Fibonacci's from the top down to the bottom. From the top, right around that 9. I mean, there was also a 9 on the S&P, right there, off by 2 days. Well, I would put that point right on the. Oh, but then you won't be able to, it won't extend. Okay, that's fine. Right, so I'm looking at that 38% Fibonacci. I think it's gonna struggle to break it.
Interesting, okay. Yeah, I could see that.
I think it's gonna struggle to break that. So if you put the moving averages back on, it's gonna come up pretty short.
Interesting, yeah, that's an interesting read, because yeah, that would be for me, yeah, coming up well short, and this is a situation where I really want to see a reversion to the mean, and I define that by a return to the 50 EMA. So yeah, if it does reject that 0.382, that could be a problem for me. I would want to see it get up. If it could get up to the 0.5, that would line up with the moving average quite nicely, and that would be a nice price for me to exit. That's pretty much where my orders are set, are right in here. So yeah, let me show one indicator here. So distance from moving average is something that I pay very close attention to. Let's move it to the 50. Very important indicator to me. When price gets overextended from the moving average, then it is highly likely to revert to the mean. And this is unprecedented territory down here, being this far extended below the 50-day moving average. So this is a spot where I would really want to see this thing return to zero. And it's been struggling to do so, but at some point, there's two ways for it to revert to the mean. It could just basically consolidate straight sideways and never, maybe get up to that 0.382. Let's see, and then kind of come down and do something like this, and then the moving average can move, and then here it reverts to the mean. Or if it could just bounce up like that, I think that would be enough for it to revert to the mean, and that's where I look to, exits positions like this, where I felt like the signal came too far extended from the moving averages.
There's one more there, right? So if you I guess if you zoom in, if you drop those guys.
Yep.
If you drop your annotations and zoom in a little bit, if you throw one more Fibonacci set from the low 3 days ago to today's high.
Okay.
If we get a pullback here and then maybe drop the indicator at the bottom to expand. Yeah. And if we get a pullback here, right, say either 38% or a little more, and then we reach the 38% Fibonacci line, let's say late next week instead, that would get you closer. Of course, this would have to take more than like 2 days, right? We just had two ridiculous days. Like I expect the market to, I've been expecting the market to pull back all day. Like yesterday, I repositioned my portfolio to be more short than long, and for some miracle, my portfolio is up today. I'm still not sure how. It's maybe my option spreads are a little even complicated for myself. Like I thought I would be down, but I'm still up. But that won't last. Like if today's day happens again tomorrow, then it definitely won't hedge me, right? Like I was basically, I was leaning short for today, and I thought the market would reverse. I certainly didn't see this giant update coming, but at least my portfolio is doing okay. I got to take a screenshot before market closes for the Twitter trolls. But yeah, I'm not expecting this to continue tomorrow again. So I am looking for a pullback, but it's going to be interesting. This is a very weird market. Like anything can really happen.
Absolutely. And yeah, I think this is in a spot where I'm, like I mentioned before, seeing some more room to the upside. We did just finally get a golden cross on the 15-minute chart that just occurred today. That's the first golden cross we've gotten on the 15-minute chart in over a month. And that's a big deal. If you go a long time with moving averages crossed over in the same direction, then it tells you that you should get a significant reaction once they do cross over in that opposite direction. So this is something I've been paying very close attention to. Each time we've gotten close in the past, we have rejected it and then come back down. So here I actually do think a pullback is going to be a buying opportunity on a short-term perspective. This is a 15-minute chart. I would look once we break through it and get the cross with the price extended, same same exact rules. I would look for price to return to the 50. So right around 24.90 or so is where I would be seeing that as a buy signal on the 15-minute. And as long as it stayed above the 200, as long as it stays above 24.40, I see more room to the upside. So I do think that a small pullback here could be in the works, and it could be an interesting buy setup just based on that 15-minute chart. And then when the 15-minute gets a golden cross, my target is the 1 hour 200 EMA. So that's what I would be looking at for a reaction off of that first golden cross, and over a month is a return to that 2760 area. And again, that is right where I'm targeting to exit some of my last positions.
All right, let's throw gold on there. I would love to get your thoughts on it.
Absolutely. So this is something I have been fascinated with. Did you see the stories recently coming out about COMEX failing to deliver on some physical gold?
Yeah, but like, listen, I've been listening to those stories for 10 years. I haven't seen them yet amount to anything crazy.
That's interesting.
We'll see what happens. There's more interesting stories coming out. It could lead to something, but I'll comment on it more. I need to read a little more about it.
Okay, yeah, I'll be interested to hear your comment. Seeing that the, at least last night, the COMEX futures were trading at a 3% premium over spot. COMEX futures broke 1700, and I guess spot did too. This was a while ago, but just yesterday, COMEX futures were over 1700. So that's significant to me, seeing that the market is really discounting those futures that after they weren't delivered, after they're having trouble delivering them anyway. Very interesting to me. So this is a chart that I always pay very close attention to, but was paying very, very close attention over the last few days, and did outline in my Telegram group as this being the line in the sand for continuing a bullish structure. If we broke down 1450 was the exact number that I gave, then it would have created a lower low, and that would have been a strong sign to me that a top is in and that gold is going to start following the rest of the markets. And since we actually did create a higher low on a wick basis and a closing basis, higher low on a closing basis and higher low on a wick basis, that maintained the bullish structure for me with higher highs and higher lows. So this does look a little bit like this could be the sell-off that starts the reversal, and that this is the bounce to sell. It does still kind of look a little bit like that, but I don't think that's the case for a number of reasons, and I am super impressed by how well gold has been holding up over that last sell-off. Every market in the world basically tanked, and gold didn't even create a lower low. Hugely, hugely significant to me, seeing that strength on this big move down. That is huge demand. And I have been hearing nothing but stories about gold stores essentially running out of gold. People running to buy gold in this environment, with the feds announcing they're going to print $6 trillion. People wanting to trade their US dollars for gold, and nobody's able to sell gold to them. So like, that to me is about as bullish as it could possibly get from a fundamental perspective. It's not just speculators speculating, it's actual demand. And that for me is a very, very big deal. And this recent pullback, not only did—
By the way, sorry, if they find my bunker, I'll sell them my gold at a nice premium.
Yeah, for a nice premium, that's right.
Because I'll turn it into, because I'd rather buy Bitcoin. Yeah,
that's interesting. Yeah, I'm holding on to my gold, that's for sure. And this is basically what I've been waiting for. And I'm in on holding gold and Bitcoin. And if anybody is selling their gold right now, it is at a premium. So that goes to tell you that it's undervalued, or that leads me to believe that it's undervalued if nobody wants to sell unless it's at the higher price. So yeah, not only did that pullback find support above 1450 to give us a slightly higher low, it also maintained this parabola, kept it intact. Looking at the weekly chart, I did start looking at this down in here as we created this higher low that didn't really fit an angular trend line. That's when I start looking for parabolas. And this pullback here looks like it wicked pretty much perfectly off that. I mean, this is something that's very subjective, can be adjusted very easily, but the case remains that this is intact, and that tells me that gold is not only maintaining its bullish structure of higher highs and higher lows, but it's also maintaining a parabolic structure, which tells us that it could appreciate much faster than just a normal linear sort of structure. One other thing that I want to point out, people may be familiar with Livermore's accumulation cylinder, and I want to pull that up real quick. Jesse Livermore had an archetype that was eerily similar to Hyperwave, and that's something that I find very interesting. So here's Livermore's speculative chart, the all-important action of stock A. Notice how it's basically just like a Hyperwave, but with no phase one. And specifically, the phase two is this accumulation cylinder with a widening mouth. That's something to me that I pay very close attention to, an accumulation cylinder with a widening mouth. That is extremely bullish. It's like the opposite of exhaustion, where basically every leg is getting more. Each leg up is more than the last. Very bullish.
But where do you think we are? Do you think we're going into number 8, or are we still going into, say, number 6?
So let's see here. I will draw up what I've been kind of viewing this as here. So that's about it right there. So we see this kind of broadening action with these higher highs. You know, this first one's a little one, bigger one. This one didn't quite get, I would have liked it to get more up here, but due to the nature of what's been going on with the coronavirus, if it wasn't for that, then it probably would have continued up there, is my opinion. So let's go back to Tone's question. So we have 1, 2, 3, 4, 5, 6, 7. I think that this point could be number 7. Let's see, we've got 1, 2, 3, 4 didn't quite get here. 5, I must have miscounted there. Oh, 1 starts back here at the first point. So yeah, okay. So 1, 2, 3, 4, 5 doesn't get all the way back. 6, 7. So here, I think this one actually needs to be adjusted to try to fit. Yeah, this one, the bottom part doesn't work quite as good, but that's not as important. It's actually a little bit more bullish. The top part being widening is most important to me. And the bottom part, if we're not getting all the way back to this bottom boundary, again, that tells me to maybe look for a parabola if we're not returning to a angular trend line. So it's even maybe a little bit more bullish than a accumulation cylinder due to the fact that it is not even returning back down to the bottom, and it is continuing to follow a parabolic trend line instead. So yeah, this is, I think, the start to a major bubble in gold.
Nice, that's good to hear.
And I'll just
by the way, the stock market is pulling back. If you want to take a look at it before moving on to, say, oil.
Okay. Beautiful. Yep. That is a very interesting setup here. This is critical.
You're on a 15. Can you just throw sequential on there? But I'm going to probably ask you to look at the 10.
Okay. Yeah, critical
That's what
area.
I was watching all day.
If this pullback doesn't support above 2,400, then I would expect retest local lows and probably break them down. But if we do support above 2,400, then we're in a good spot to go ahead and target that 1 hour 200 EMA moving to the 10-minute. And we've got nice pullback into a golden cross there. 9 here and on a 4 here. So maybe another hour or so based on this chart.
So if you throw on a 10-minute, oh yeah, you are on a 10-minute, right? So I was actually eyeing the top of the market right on that 9 around 1 p.m. Eastern, I think. So I was looking for a top there, and didn't tie it. Like it kind of sucked on timing. Would have been perfect because if you go back to yesterday, you can see how that 9 was pretty much a top. Nope. Yes. Yeah. Right there. Yeah.
Yeah.
So I was kind of eyeing that part.
It'll be interesting to see. That's getting a nice reaction off that 50. It looks like trying to form a wick. Be interesting to see if we got a 9 down around here. That would be a nice setup for me. So one thing I did want to take a look at and get your opinion on, Tone, is what has been going on with gold compared to silver.
Oh yeah.
There's like a major decoupling happening as far as I'm concerned. And let's see, I'm trying to get multiple charts up so I can show both of these back to back. 1 second. Okay.
All right.
So
Pull up your charts. I'm deciding. I have 4 minutes to decide if I'm gonna exit anything out of the market. Like I almost want to keep everything because I'm more positioned for the downside tomorrow. And there's weakness into end of day, and you know what I think about that. I expect it to continue. So I may not realize any gains and anticipate some downside tomorrow.
all right, well, best of luck with that action. And so, yeah, wanting to take a look at the major difference in gold versus silver and look at how it has been flat out decoupling here over the last month or so. So notice how I was talking about how strong gold was on that sell-off. Definitely not the case with silver. Let's take a look at what happened to silver on that last sell-off. It took out the lows of 2016. That is a big deal. It has gotten a reaction back above it, but just in comparison to gold, for gold to be at an equal spot as silver, it would have had to fall below $1,000 to take out its 2016 lows. So that's not even anywhere close to the same thing. Gold continues to make higher highs and higher lows. Silver's been making lower highs and lower lows for a couple years now. Since 2017, gold's on higher highs and higher lows. Since 2017, silver's on lower high and lower lows. Gold's got a golden cross with the 50 and 200 week moving averages. Silver tried to, but failed. Now it is back down here in the $14 territory. And the most interesting chart to me, perhaps out of anything going on right now, is the gold to silver ratio, which has reached a 10,000 year high. It has never been this high before.
Talking about, hey, you want to see something cool? Turn on sequential.
Yep.
And go to the daily.
Oh, look at that. How beautiful. That is just perfect. And I mean, that is absolutely amazing. I mean, that's a serious change. Gold has been trapped in a specific range here, kind of under about 84 from like 30 to 84 for years. And for this thing to break out in the way that it has is a huge, huge deal. And really, the only explanation that makes sense to me is that this is a result of central banks buying gold. It has been in the news over the last few years that China and Russia have been big buyers of gold, and they are investing heavily in that and not necessarily in silver. And for me, that could be one of the biggest reasons why we are seeing such a big difference in the gold and silver charts, as well as this gold to silver ratio. This tells us there is a big change in the supply and demand, and that is something that should continue to happen as silver is no longer money. It is still valued as money, and it shouldn't be. And that is why I would expect this to continue going in this direction over the years and decades to come. So really, really interesting chart right here. I'll go ahead and pull up oil. A very, very interesting chart. Oil, kind of like silver, took out its 2016 lows. It's been creating lower highs and lower lows here for a bit. So I am going to see potentially if we can use the lower highs to draw in a parallel channel. Nope. Took that out right there. So that's the first thing that I do when I see a lower high, is try to identify a parallel channel, and that did smash down right through it. So there is a couple things that I've been looking at. Again, a chart that definitely needs to revert to the mean as far as I'm concerned. And let's take a look. The 50 EMA has been strong resistance on the 4 hour, and then when that gave up, the 200 has been strong resistance as well. Here's where the crossover happened, up here at $60 or so. So that has been a big move, and therefore a reversion to the mean is likely in my mind. And this is what I would be looking at, is filling this gap at $40, $41 or so. And I want to check daily moving average to see. Yeah, that's kind of what I would be looking at, is a return at least to the 50 EMA on the daily. And I would really like to see that gap get filled at $41. That makes the most sense to me. And we are kind of seeing a bit of a bottoming structure. This is a higher low here on the 4 hour, and this is a nice kind of V sort of spike off of breaking down horizontal support. Got a nice V spike, and now it's kind of trying to create a higher low. So this is starting to show some signs of life. And in that situation, I do want to zoom in and see what some smaller time frames may be telling me. And it has reclaimed the 15-minute EMAs and gotten awful choppy in here. So that tells me the 1 hour must be coming up here soon. And it's still a little ways away. So yeah, still looks like still some time for a little bit of this range to continue between 27 and 22. And if we can get above this 1 hour EMA and lead to a golden cross, then I would expect that to lead to us filling this gap up here around $40. So that's what I'm looking at on oil.
Yeah, so with me and oil, it's not like oil is not, it's in the middle of nowhere as far as sequential is concerned. So I'm kind of frozen right now on oil. So there's not really much I can do with oil at the moment, unfortunately. I am looking for a chart someone sent me this morning. I actually get like so many messages, and like some of them are really cool, and I check them like in the middle of the night, and then I can never find them again, which gets unfortunate. But man, I wish I remembered who sent it too. I don't think I'll be able to get to it. Damn it. It would have been good to ask you because you're a Wyckoff guy and I'm not. And it was a Wyckoff accumulation in Bitcoin that looked somewhat interesting. I like checking my phone, like going through my phone now.
I actually did look at this. I think I do know what he's
It
talking
was on
about.
a higher level scale. Yeah. It was on a daily scale.
Oh, interesting. Okay, so I was looking at it on a
Well, whoever sent it to me this morning, if you're watching, send it to me again. I think it was direct to me. I don't think it was in a group either. So the reason why I'm not a fan of Wyckoff is because to me, it feels like it has too many moving parts and it's too subjective. So it's in like that Elliott wave category for me.
Yeah, I can understand that. And that is something that I think I don't share the perspective, and it's actually one of my favorite patterns. And I do notice that markets follow this pattern very regularly, and that the very specific points to the pattern can really help us to identify.
Oh, I got it. I found it.
Great.
Shit. Okay, cool. Now I got to get my trading view working because for some reason I have problems with that. What the hell is that?
And I can just point out the one that I was looking at on the 4 hour while you get that together. So yeah, we did get this.
Let me send it to you because now I can't get trading view open on my computer.
Cool.
So all these tech issues, man. So tell me what you think about this, because like I said, I'm not a Wyckoff guy, but it looked pretty cool. I know a little bit about it. I sent it to you on Telegram if you want to throw that up and screen share.
Great. Yeah, I will do that here. I was just going to walk through the one that I was looking at very quickly, and then I'll pull that up. So yeah, the schematic number 2 of Wyckoff accumulation, I do think did occur on this recent action. And here we'll just look for a preliminary support, selling climax, automatic reaction, secondary test, and then a higher low that follows. So here we do have preliminary support, selling climax, automatic reaction, secondary test, and then it creates the higher low. And then after you break through that horizontal, you would then look for, I guess, depending on how you're drawing it, I think like that. Then you look for a pullback or a consolidation as our signal of strength here in phase D. After we get the higher low and break through horizontal resistance, look for a consolidation to give us the signal of strength. And that is, could be definitely considered that right there for sure. And then now you look for that next stage of markup to again get us back to that area we were looking at before. So let's see if that's kind of the same one he was looking at. I think so. I'm pulling that over right now.
We can see your monitor, so don't dox unnecessary things.
All right.
Like everyone you're talking to.
Yeah, I think this will be fine. Okay, so let's see here. This is actually a 60-minute chart, and that actually may look better on the 1 hour. But yeah, this is the exact same schematic that I was just looking at. I guess his preliminary support I would disagree with. I would much prefer that preliminary support right there, but that's not a problem. Selling climax on high volume, very nice. Automatic reaction, secondary test. I wonder if we got on the 1 hour another secondary test. It's possible. And nope, we didn't. So yeah, 1 hour or the 4 hour, still both of them look nice. And yeah, I would definitely consider that a Wyckoff accumulation that confirmed with this kind of signal of strength. The buying opportunities are the last point of support, and then that pullback into the horizontals. So yeah, pretty nice Wyckoff. I would definitely like to see this take off more than its struggle around this local high. That's not too good and is really starting to kind of show some little bit worrisome signs with this lower low here, and potentially a lower high. So definitely a good time to pay close attention to the charts. That's for darn sure. And I appreciate you bringing that up. Stop share.
All right. Anything else? Maybe I can, I guess I should probably throw some of my screen share on real quick. Take a look at the markets. Once again, I am joined by Sawcruhteez. This is his YouTube channel. You can subscribe to his, you can subscribe to mine. Please go ahead and go for it. And Sawcruhteez will be joining us at the Financial Summit in Bali. First week of November. We are both fully assuming that this whole COVID-19 virus will be long behind us. I will also be in Malta. I don't know if Sawcruhteez is going to join for understanding Bitcoin. He is, of course, welcome. And if you guys want to support, please use the affiliate page. If you're going to trade, Bybit, Deribit, social trading with 3 commas. I also have eToro, LVL. I use the Embly card. I love it. Of course, there's trading view and other stuff. Okay, let me just quickly go through the charts. I did it this morning as well. Not going to look at the long-term stuff. The weekly chart, to me, is in the middle of nowhere. I needed to either get back below this moving average and Fibonacci line at 56, or I needed firmly above this $7,200 area, which was the prior level of support. That is a similar area that Sawcruhteez is looking to short from. This actually, that's more like 72. This is closer to 68 where we are now. So this entire zone is kind of one and the same. Sawcruhteez is looking to short this area. From my understanding, I need to see it. I personally am not looking to short from this area. My trading is done a little bit differently. I would rather short confirmation. I don't like, let's say, shorting into there unless there is a 9. And ironically, there is a 9 on the daily, but I would need it to spike. If there is a big rise tomorrow in Bitcoin and then I see a major rejection, that would make it interesting for me. All eyes tomorrow on this 8 coming up. I'm not going to look at the lower level time frames. Ooh, the premium on GBTC came down today. Interesting. Very interesting. I totally missed it. So let's see what happens tomorrow. If Bitcoin pulls back down a little bit and the premium comes down, that would be of potential interest. Hey, so what do you think of the shitcoins? What do you think of the Bitcoin dominance?
I think it's looking really good. The one silver lining out of this action that we've seen over the last week or so is that people did have a little bit of a flight to safety into Bitcoin. I mostly follow ETH against BTC, and it sold off pretty significantly. Now it's back down at 0.02. It was there for a while, really looking like alts were in a position to regain some significant value on BTC. At the beginning of the year, the Bitcoin market cap dominance started creating lower highs and lower lows, and potentially that horizontal that Tone's got drawn was a very important level for me as well. So it was really starting to look like alts were going to be gaining value against Bitcoin over the first half of 2020, and I was long alts and against US dollar and Bitcoin due to the bullish nature of the trends. And seeing that turn around after this last move is a very, very good sign. If we would have had that major sell-off and Bitcoin lost dominance, that would have been really hard for me to understand, and a really bad sign as far as I'm concerned. So that's another thing that kind of makes me inclined, interested in the idea that we did bottom, is that now that Bitcoin is rallying against alts again, more money is flowing into BTC than alts. That is a situation that I really like seeing and is really good for the long-term health of Bitcoin, of course.
All right, let me go through real quick. Hash power, not going to talk about it. Just for some reason, I like looking at my own charts. Yeah, gold, I'm going to wait till the end of the week to really comment. Same thing with silver. We already covered all that. See, oil's like in the middle of nowhere on the daily sequential, and also on the weekly sequential, it's a bit in the middle of nowhere. So I'm just staying away from oil at the moment. Markets really pulled back at the end of the session. So that's interesting what's going to happen going into tomorrow. I want to get to Hyperwave, so that's why I'm kind of rushing through some of these. And all right, it's the Dow Jones. Okay, so Hyperwave. I guess let's start with the Bitcoin Hyperwave. Here's how I have it drawn. It's a little bit, you know, the Bitcoin hype. Is it just me, or is it like the more time goes by, the more difficult it is to draw phase 1, 2, and 3 on Bitcoin, even though the history doesn't change?
That's funny. Yeah, I've definitely taken a very, very close look at both of those blue lines that you have drawn, because that completely changes the hyperwave depending on where you draw phase 1. And there is somebody who I really respect. His name's Gabriel Harper. He's in the Hyperwave Telegram group, and he is drawing it with that bottom horizontal, which there's a lot of valid reasons to do that. And then that makes the purple your phase 2. And there's actually kind of a way to adjust that a little bit such that it touches this recent action, which is very intriguing. Gabriel had that drawn that way in real time. He didn't have to adjust it, and it came down and touched his phase 2. So that kind of made me intrigued with that idea. And I still myself am using the top phase 1 to draw the phase 1, and then that means that this purple one doesn't qualify as our phase 2. And he must have been using some of those wicks, or no, yeah,
you could have been using a different exchange.
Yep, potentially, because yeah, like you see, we couldn't have those closes below.
I believe I'm using the BLX. I'm using the index. If you use a single exchange, it's possible that his would have been a little bit steeper.
Okay. So yeah, I think that there's definitely valid reasons to have that as your phase 2. And if that is the case, then it's still possible that it could turn into a funky hyperwave. It only needs to return to phase 1 if it breaks down phase 2. So it is a very intriguing idea, and all of the rules would be met by drawing them with the phase 1 around 700 or so. But I still am myself inclined to use the interpretation of the $1,000 phase 1, and then that means the phase 2 broke down in 2018. Yeah, that you're green. What you have as the phase 3, that would be my phase 2, and that broke down, and now tells me that there's no more possibility of a funky hyperwave. But if 5 years down the road, we maintain this support above the purple line and go on to create a new all-time high, I'm going to say that my interpretation was wrong and that that one's the correct one.
All right. What do you think of my view that because hyperwave is taking a really long time to get back to phase 1, should you not almost double the value of phase 1 due to the halving? And that takes me back to this chart, because unlike other assets, the Bitcoin halving creates, what the hell is it? This situation where there's just less supply in the market. So not only, unlike other assets that Tyler has always been utilizing for hyperwave, everyone knows inflation. The more money government prints, the more inflationary all of these assets are, whether it's Apple stock or GE that was around back then, or whatever. But in Bitcoin, there's an additional supply shock in that of the halvings. So now that hyperwave is taking more than 4 years to get there, or will be taking, it'll go through the halving period. Actually, it has taken more than 4 years to go from phase 1 into phase 7. And potentially, it could take 8 years going through 2 halvings. And the first halving pretty started like a year before. Like the halving took place like a year before the hyperwave kicked off. Hyperwave kicked off. No, I guess kicked off 2015, so it was a few years past. But in any case, what do you think that going down to the $2,000 area after the halving completes the hyperwave because of the nature of Bitcoin?
I think that's a really intriguing idea, and I've been giving that a little bit of thought since first hearing you say that. And it's something that, as I thought about it, I don't think Tyler would allow for a change like that, because I do remember him being very adamant about phase 1 being a horizontal line and the price never changes over time. But you're right that Bitcoin is completely unique in the sense that it's the only asset that goes through this halving, and therefore it's a very reasonable argument to say that that halving could affect where the phase 1 should be drawn. So I've thought about it, and I don't have a strong opinion either way. I'm very intrigued by that idea. I myself am keeping my phase 1 at 1,000, but I'm definitely going to have to give that some more thought, because it's an intriguing idea, and there's a lot of merit to it.
Yeah, because also look where it goes into, right? Because right here, we probably also had a hyperwave in Bitcoin during the 2013 bubble. And the 2013 bubble, you know, it came down to about 150. And there was a mini bubble before that, which had totally reached this one. But right here, you know, this other bubble back in 2011, the price went all the way to $30. Now, I know we didn't fall down to 60, which would have been that doubling, because this is having passed, because it's gone past the halving. But I think because of Bitcoin's insane stock to flow ratio, one of the people in the Hyperwave research channel may want to try to do some analysis, because the longer the time goes between these things, like try to put that stock to flow ratio into it, and perhaps this here going down to 150 actually completed that hyperwave, and assuming that your horizontal line was around $30, but the stock to flow ratio was so bad that is like almost the equivalent of an asset that could theoretically have infinite amount of shares or whatever, infinite amount of liquidity. And maybe this could also apply to something like gold, because I always anticipated gold would come back and retest the 1980 high of $800. And that's why I always thought that gold would go lower. But once again, for that gold stock to flow ratio, maybe gold going down to 1,050 satisfies the gold hyperwave due to the stock to flow.
Yeah, it's a really, really interesting idea. And yeah, I think maybe gold could be a corollary that we could look at, because yeah, to do any analysis, it would be difficult since Bitcoin is like the only one that I have. So it'd be really hard to try to find much confirmation, but potentially gold would be a good option. And what I'm thinking is that the stock to flow doesn't change that much with gold. I could be wrong, but
well, Tyler, I agree with you, but remember, 1980 to 2011 is 30 years, right? A gold stock to flow doesn't change year to year, but on a 30, 35 year scale, it adds up.
Okay. That's interesting, especially with the technology and whatnot. So yeah, that's a very interesting idea that I will have to think about more. One thing I can say is that we did examine this closely in the book, and one of probably my favorite chapter in the book is the hyperwave spectrum. It starts on one end with what is not a hyperwave but is very, very close, and then on the other end, it's what is the most perfective hyperwave we've ever seen. And on this end of what is not a hyperwave but is very close, if you could leave it on this chart for just a second, this one is this chart right here that we're looking at. This is about as close to being a hyperwave as you can get without it actually being a hyperwave. Reason that this isn't a hyperwave is that it doesn't have 7 phases. Very similar to Litecoin in 2017. It's got the structure and it really looks like it is a hyperwave, but it goes straight from phase 2 to phase 4. It breaks out of phase 1, then you get a nice phase 2, but then it just takes off like a 90-degree angle into a phase 4. So this only has 6 phases. And that was something that Tyler was very adamant about, is that all hyperwaves have 7 phases, not 6 and not 8. So this is one, this and Litecoin are two that
I kind of have it drawn with 7 phases, but that's also because I'm ignoring this rise. So I have my phase 1 here, and it's perhaps not long enough.
That's interesting. Yeah. And that's, now we're getting into the really fun things about hyperwave, where it's, there's good arguments to be made on either side. And that's a really interesting perspective that I hadn't, I don't think we considered this. And this could be considered valid. I mean, it is a very short phase 1 that only kind of, you want phase 1s to be long, and you also want them to test the top resistance multiple times. So it definitely isn't an ideal phase 1, but I don't know if that would be enough to disqualify it. So yeah, it's really interesting that maybe that would be enough to put it on just on the inside of the spectrum of what is a hyperwave, but the worst example that we can find. That could be a good option for that, because yeah, having that extra phase in there does give us 7 phases. The phase 1 leaves a lot to be desired, but is that enough to disqualify it? I don't know. Tyler always did say the most important phase of a hyperwave is phase 1. So if your most important phase is leaving a bunch to be desired, maybe it is enough to disqualify. But when we get on this end where it's very murky, where one person could say it is, one person could say it isn't, and they could both be right. They could both have very good reasons. So that's a situation where maybe I'd argue it isn't, maybe Tone argues it is, and we could both be right.
All right. I thought I had a chart of the stock market hyperwave. I don't. I should probably draw one, but if you have one handy, I can hand screen share back to you. Anything in traditional markets, it could be a particular stock like an Amazon, which or Netflix. I mean, Netflix is clearly this whole Corona thing is helping Netflix. So while a lot of us thought Netflix completed its hyperwave, and Netflix was due for some disruption with a lot of competitors, it's not that far from new all-time highs. So there goes that idea. So what's your view on the traditional markets these days? Do you have a hyperwave on traditional markets?
Yeah, I do. And that is a very, very important topic that I forgot to cover when I was looking at the S&P. So I'm glad that you brought it up. If I'll go ahead and put it back on screen share myself. And just drawing in these lines real quickly. Apologies.
Wow, so that's a really big one. So you're going back to, oh, by the way, so I saw a chart of the S&P that takes it back to like 1800s on TradingView.
Really? What ticker, do you know?
I'm about to find out. Hold on.
That I love those long history charts.
I know, because I have the Dow. I have the Dow going back to, I think, 1920 or something in my Dow history. So I have my Dow history chart. I'm sure you've seen it. That one begins in 1915, just like 2 years after the Fed. Let me see if I can get that S&P chart that goes back really far. but go on with your analysis, and if I get that ticker, I'll give it to you.
All right. So yeah, the S&P is the biggest hyperwave that we have ever seen in terms of length. This started, basically broke out of phase one back in the early 80s and has been in a hyperwave ever since. And it's a bit of a unique one in the sense that it has taken it's got multiple phase threes here. We break out of phase one, we establish phase two, and then we enter phase three in the dot-com bubble and break that down and perfectly find support at the phase two after the '08 crash. So that gives us, keeps the phase two intact, and then we start another phase three. So this is perfectly okay and well within the rules and well within reason. There will be, when you enter phase three, 85% of the time it will go on to enter phase four. And there will be 15% of the time where it breaks down. And out of that 15%, sometimes it's going to find support at phase two and reestablish a phase three. This happened with Boeing, actually like 4 times it had to try to establish phase threes. So what's most important here is that we have now broken down my phase three. And this was something that was very, very important to me. On this big sell-off here, I was really wanting to see a sharp reaction off of this trend line. Every time that we've touched it or gotten close to it in the past, it has caused for big moves to follow. And that's really what I was looking at here. Still maybe not fully understanding how big of the repercussions we could be looking at from the virus. So I was still mostly concerned about my technicals here and really focusing on this line. This was my line in the sand for staying bullish. Similar to what we were looking at with gold, if we could maintain support here, it would give us a higher low, and it would keep this very, very important boundary intact. Whereas if we broke it down, now we've got a lower low, and now we have violated phase three, which means the target becomes phase two. And these things are right on top of each other, so let me pull this out. And what price phase two would be at would be entirely dependent upon how long it took to get there. If it fell there tomorrow, it'd be down here at 900. If it took, 4 or 5 years, then it'd be up here around 1,000. So it's pretty darn interesting that Hyperwave is, and completely coincidental, obviously, but Hyperwave is calling for around 1,000 in the S&P and calling for that in Bitcoin as well.
All right, let me grab screen share real quick, and then I'll share the ticker with you.
All right. I did have a couple stocks I wanted to pull up. Do you want me to?
So keep it there. Okay, so here's what you do. Here's what you do. I mean, you can open like a new chart or something. You can do save as. You're not being cheap like me. You actually pay for TradingView at the moment, right?
Yeah, I've got the full version.
All right, so just do a save chart as and save it like a historical S&P because you're going to change the ticker. So I don't want you to lose your Hyperwave lines.
Oh, I already deleted them. I'm bad at saving.
Oh,
those.
You don't care. Okay. So if you just type SPX again, but don't click the first one that shows up. Click that one. Yeah. And it has data going back to 1871.
Wow, that would be so cool. That would give me a
But it's end of day data. It's not intraday data. So if you start zooming in on that, you just get like 1 point per day.
That is so cool. I'm going to have to go back and check this out. How neat is that? I mean, that is really cool. I appreciate you sharing that. Definitely going to have fun looking into that. That's for sure. And a quick tip for charts that look like this, throwing on Henkinashi candles makes it look a whole lot better. It will clean all that out.
Okay. Yeah.
So I wanted to, take a look. Amazon and then Netflix are two that are really interesting to me because I'm wondering if also this is going to be good for Amazon if they're going to start fulfilling a lot more shipments and maybe getting more customers who were, just going down to Walmart in the past. So this is one that's been super interesting to me because, again, it is a very nice Hyperwave.
That was like a beautiful hold of phase three, man.
Yeah, let's go ahead and get these lines up here. And I do need to get better at saving these, but what are you going to do? So yeah, this is just a textbook hyperwave that absolutely is on the kind of perfected end of the spectrum that we were talking about earlier. So let's see.
Does it bother you that phase 3 is significantly longer in time than phase 2?
Yes, it does. And that tells me that potentially what we could be looking at as a funky hyperwave, and that's actually a really good observation because it's very subjective what phase this could be in. And you saying that, I think, helps me come to my conclusion, because what will happen with hyperwaves is sometimes they get extended from the phase lines and you don't know, is this phase 4? Or is this just an extension from phase 3? And that's something that we were looking at with Tyler for a long time, trying to figure out, was this phase 4? Because if it was, then this looks like a nice 5 and 6. And then we were wondering, would this maybe be the first 6 that gets above phase 4? When it didn't, now it became really likely that this was 5, 6, starting 7. And for once you start 7, the target is phase 3. And if you can find support from phase 3 and go on to create a new all-time high, what you have is a funky hyperwave. And that resolves the problem of the length of phase 3. Because now if we draw this in as phase 4, those are perfect sort of proportions. Phase 4 is just about, about the same as 3 and 2. And since they're steeper, it's a little bit less time. So these proportions and angles would be perfect. And then you get, again, what is pretty much not textbook, but definitely well within reason for a 5, 6, 7 starts. And if it finds support at phase 3 and creates a new all-time high, now we have a funky hyperwave. And now it's not a problem with this length in relation to phase 2, because funky hyperwaves, that's how it'll happen, is the phase that provides the support to make it a funky will be way overextended compared to the others. So that is what I'm trying to decide, is this phase 4 or is it just an extension from phase 3? When I consider the proportions, that tells me that this is a really nice phase 4 and that we just created a funky hyperwave. And it looks like this recent action may be good for Amazon as well. And let's take a look at Netflix very quickly.
So, wait, they changed the card. Can you just zoom out this to the beginning of Netflix?
Netflix or Amazon?
Sorry, Amazon.
Yep.
Yeah, okay. I was gonna say, what about a crazy idea where that line that you're debating is phase 3 is a potential phase 2, but I don't think so.
Yeah, I like, this is a real nice phase 1 here, and a clean break to phase 2. So yeah, I really like how the 2 and 3 are drawn, and real nice with that support off of phase 3 there. So yeah, that's very, very interesting chart and a very weird setup right here. I can't remember my this sort of like H pattern or something. Like, this is just a weird setup.
It is, but it's also, we're in a weird time, man. I really wish Tyler would help us guide through this Corona insanity.
Man, you and me both, ain't that for sure. All right, so yeah, this one, same situation where it really looked like, so we had our...
Somebody in the live chat mentioned that they are drawing an ascending triangle on Netflix. I don't see it by looking at this. I
actually am drawing that myself. So yeah, it's a bit of a weird one because
it's too weird because, like, unlike Netflix, which reached its high like yesterday or like just a few weeks ago, Netflix reached its high like early last year. So they're kind of divergent, but it's like they're equally weird, just on different sides of the last 2 years.
Yeah, absolutely. Absolutely, and I do think that this is a pretty this meets the rules of a ascending triangle, at least up to this point. It's weird to have to kind of lop this off to the side, but if we do take that away, now it's you know, higher lows, horizontal resistance with no closes above, 3 tests here, 2 here, almost a third here.
Yeah, but it can take another year and a half to a breakout, so it's like it's like nice that you can draw it, but it's almost useless for your trading.
I would take the other opinion and say that for me, a big part of my profitability is protecting myself from ranging markets. And that's where I think patterns can be very, very useful. When you recognize patterns, it tells me to kind of stay away from these moving average crossover signals because they're going to be very choppy. When we enter sideways, when we enter ranges, then the moving averages are just going to get really choppy, and ranges are usually defined by patterns. So if we can get good at recognizing patterns and also setting alerts, so this is where I would be looking at not being interested in taking any signals as long as we're stuck in here, and that might save me a lot of money over the next couple years. And then what else I can do is set an alert on this and set an alert on this, so that as soon as it's violated, now I'm ready to go and I don't have to worry about what's going on maybe over the next couple years. So yeah, I definitely do think it is important, at least for me, to be able to identify patterns, even if they aren't going to be tradable events. They can become no trade zones. And yeah, this is another one that is very interesting from a hyperwave perspective. Let me see where we would put these lines. And what happened here is a much kind of cleaner 5 and 6 and 7, and here's that 7. So what we can see is the 7, let me make sure I draw this right, as the 7, this did close below phase 3. So that did tell us that phase 2 is now the target, and we should not be able to create a new all-time high without at least returning to phase 2. And that's going to be way down here. In the kind of $150 ballpark to 200 depending. So that's really intriguing that could something like the coronavirus be enough to stop this hyperwave from reaching its target and send it on to new all-time highs, which this pattern makes it look, you know, like that's very, very reasonable. And a big change like that coronavirus, that could be the perfect setup to cause something to disrespect that rule of phase 7 not being able to create a new all-time high unless it's from support on a phase 3 or a phase 2. So really interesting chart here for me. And that's about all that I got. You want me to send it back your way? You got anything else, or about wrap it up? Or almost at 2 hours now. Nope. Don't know what happened. Click stop screen share. Now I'm not seeing anything. Not hearing anything either. Maybe Tone got disconnected. I think Tone, oh, there we go. There you are.
Okay, yeah, I lost internet there for a second. I think I'm back.
All right. Well, I just had finished up with what I was wanting to cover, so that was not a problem for me.
All right. Yeah, let's just maybe go through some questions, and then, wow, it's been a long stream. I got a bunch of questions. Thank you, Bitcoin Motorist, for shooting those over to me. let's see, maybe we can go through these fast. Maybe we won't even have to pull up charts. I'll ask it and then maybe I'll answer it and then I'll get your take or the other way around. Well, this one is to you. Would this book be good for beginners?
Absolutely. Definitely. There is a introduction to technical analysis as part of the intro, so that people that really don't have any understanding of technical analysis at all should be able to read this and get everything they need to out of it, because all that you need to know for Hyperwave is trend lines and candlesticks. So if you can understand what a candlestick represents and understand what trend lines are, then that's really all that you need to implement Hyperwave. So yeah, it is definitely good for beginners from that perspective. And also I think it does a good job of kind of giving a bit of a background of the situation that led to these Hyperwaves. Hyperwaves are very, very rare. And right now we're getting more than we've ever gotten in the past. So kind of diving into the underlying macroeconomics of what may be going on there will also potentially help some people understand more about Bitcoin and gold as well. So definitely a good thing for new people to technical analysis and new people to Bitcoin.
Okay, we're not going to look at this, but maybe for you, Tyler, someone is asking to look at the 233 exponential moving average on the weekly. So I don't know if that's a number you look at. I don't know if you want to comment on it. You're the exponential average guy. I'm more of a simple moving average guy. I also don't like picking these moving averages like after the fact. Like if they're not using them in real time, then they don't matter.
Yeah, I can definitely understand that perspective for sure. And that's something that I agree with, that you kind of need to pick something and stick to it. But I do see a lot of merit in the in that one, the 233 day. That was just recently shared by Fibbo Swanee, who is a technical analyst who I really respect. And yeah, I'm just pulling
that's who asked the question, actually.
Oh, is that right? Well, great. So yeah, I'm just pulling up his chart here to show the key, the times that it has acted as support in the past. Is not something that I really pay attention to, but when I see a chart like this, I do, you know, it's really interesting. So here he shows that back in 15, it held perfectly twice on 2 attempts before the major run-up. And then here we're getting some wicks off of it. So seeing that is very intriguing to me. But I do agree with you that since I'm using the 200, I don't really want to also use the 233. I don't want my chart to have like 50 moving averages on them. But I think he uses the 233 because it's a Fibonacci number. And that's something that makes sense to me, is if you're going to use your moving averages based on fibs, like say instead of the 50-day moving average, you're using the 55. I think that's why he uses those, and it makes a lot of sense. And so yeah, I always keep an eye on that, but I don't use that myself.
So some people joined late. In case you guys hear me call Sawcruhteez Tyler, his real name is Tyler. You'll see it if you look at the book. I'll try to keep calling you Sawcruhteez, but if I do call him Tyler, it's because his name is also Tyler, guys. Okay, we have another question. Do you? This is a really hard question to answer, right? Because it forces you to say yes or no, and I'm gonna answer the question before I say it. My answer is I don't know. Here's the question: do you think the daily? Do you think Bitcoin will rally into the daily depth cross? And I'm gonna pull it up on my side, and it's right here. Here comes the depth cross. The short term, I'm using the 50. The blue is the 200. Here's the depth cross. We're still pretty far away from it. Do I think we're gonna rally into it? Well, it's actually impossible to rally into it because tomorrow we're crossing, and I don't think we're gonna go up, you know, $2,000 in price tomorrow. We could. I don't think we will. So the question is, what will Bitcoin do? I would like to see Bitcoin touch a moving average here. Which one is it going to touch? I don't know. Maybe it'll touch the cross at 7,800. Maybe it'll hit a 1 to 4 day correction, enter the countdown phase. But if it does enter the countdown phase to the upside, it's actually pretty likely to go above 8,500. So to answer the question, do I think Bitcoin will rally into this moving average cluster? At the moment, it doesn't feel like it will. But my real answer to this, I have absolutely no idea.
So for me, this is what we're seeing currently is rallying into the death cross. Like for me, I don't need the price to actually touch the moving averages. But when we broke down to like 4 grand and we're way below moving averages that still have a bullish crossover, it tells me that it's highly likely, just like I was talking about in the stock market, it's highly likely that when we're below moving averages that have a bullish crossover, there's going to be a bounce. And that bounce is going to occur while the moving averages cross bearish. So that is what I've been looking for, is a bounce up and into that moving average crossover. And for me, we're getting it. If we would have just consolidated sideways from 4,000 to 5,000 while those crossed over, that would have been not a bounce into it and would have made me believe that we weren't going to get it. But this action right here is exactly a bounce into the death cross as far as I'm concerned, and exactly why I'm viewing it as a shorting opportunity. Whether it gets to 82, I don't know myself. If it does, I'm actually going to be turning pretty darn bullish because I'm looking at 75 is where things start to shift for me. So what I'm expecting is this to bounce up and into about 75, and that is a big reason why I'm selling it, is because it is a pull up and into a death cross, even though it may not quite get to that price and it may be significantly far away, like a couple thousand. The point is we still just rallied, you know, a big rally, not basically 100% on BitMEX, and that is a pull into a death cross for me.
All right, no, I agree with that, and we're already like 60% back towards that death cross. It should be like more than 60%, but we've already gone pretty far. So now we're almost pushing it. So yeah, can you just pull up the book one more time since I have you on camera?
You got it.
Boom, there it is. There it is, guys.
And
apparently, I think we're a little tired for this question. At least I am. From like I've been going to bed early. I've been up at like 6 a.m. Eastern time, getting ready for markets and stuff. But I'll read the question and check the distance from the mean on last 2 recessions. Look at the weekly with the 200 simple moving average from 2008 and 2001. Thoughts? I think this is too complicated of a question. I don't think I'll be able to look at it, but I thought I'd read it anyway. Bitcoin's on a daily death cross. What do we think about that? I think we already discussed that. Someone is saying people are underestimating this crisis. I'm not. Though I do need some more meat. Export bans. Yeah, no, I still think the markets can go down a little further in the stock market, but they've already fallen quite a bit. Silver is an industrial metal, no demand out there right now. That makes sense as to why it decoupled so badly. There's not going to be that much industrial demand for silver, but there is still, gold bug and money demand for gold. Okay. Okay, that's it. We're good. We've got almost 2 hours, man. I think it's good to end it. Hey guys, thank you so much for watching. I'll try to bring you another one of these with Sawcruhteez, I don't know, sometime next month. I've been doing a lot less. And man, it's like it's becoming risky to have like people on your show because like you were like responsible for them. So I don't know how many more guests I'm gonna have on these days after all of the incidents that we've already had. So we're gonna stick to it, and I'm gonna keep bringing you these shows. I'm planning to do a Bitcoin law review tomorrow, so I got a lot of homework to do tonight to prepare for the law review. I'll probably bring you a market show tomorrow morning. I am still trading every day, all day, so hopefully I can use this opportunity to, beef up my retirement portfolio a little bit. Tyler, you're still trading every day. Sawcruhteez, you're still trading every day. And thanks a lot for coming on the show, and I'll see all of you guys on the next one. Any closing thoughts?
No, just thank you very much for having me on. It's always a pleasure. And yeah, we'll be more than happy to come on sometime next month if we can figure out a time. Make sure to get yourself stocked up on some more meat.
Yeah. And hey, guys, come join us in Bali. Sawcruhteez will be there along with many others. Check out the site. If this is something for you, come and join us. And we'll talk to you all on the next one. Bye, guys.